Good morning, good afternoon, everyone. I'm Varnika Goel, Research Director and co founder at Twimbit. I also lead the banking and financial services research. How banks are doing it is by building ecosystems or partnering with third party ecosystems. What essentially they're capitalizing on is a massive growth opportunity of uh, introducing customer journey led products and services and thrive and win in this embedded world. With that, I would like to welcome our esteemed leaders for the first panel discussion, Ketan Samani, Group Chief Digital and Innovation Officer, China Development Financial, and Arvid Swartsenburg, Head of Partnerships and Strategy, UOB Tomorrow Digital Group. Thank you so much for joining in today, guys.
Thanks, Varnika.
Hi, Varnika. Hey, Ketan. Thanks for having us.
Hello, thank you. So let's start. And by what I mean is that when we talk about ecosystems, what are the successes that you've seen essentially that are becoming a talk of the town when we talk about banking ecosystems?
Ketan, you want to take this one first?
I think the ecosystem is, as you know, is a hot topic for almost or multiple verticals who are in consumer businesses. Finance is no exception. Looking at the history of ecosystem, digitization has created visibility to an ecosystem. But historically speaking, if you look at corporate banking or SME banking, where they were full of ecosystems by themselves. The product services such as trade finance linked various companies, various countries, and various banks together in a network. So it is not new necessarily. However, when it comes to, as you put it very clearly, growth, most markets today have got a high degree of saturation point around financial services. And the consumers are looking for continuous value, and the financial services have to continuously invent in creating value. Originally, financial services were enough. It is an incumbent 2, 3, 4 decades ago to create value on a one-to-one basis. But given the digitization, consumers seek value now on multiple platforms, directly or indirectly. And I think that's what we are seeing at the moment, both locally and internationally.
And what do you think, Arvid? That's an interesting point that Ketan has raised.
Yeah, certainly. No, I agree. I think it is about building growth. I think maybe just to take a step back and introduce myself and what I do at UOB. What we're trying to do is essentially build the future of ASEAN. So before, obviously, we were talking about building the future of Philippines. I think our mission is pretty broad. We're a Singapore-based bank that actually launched a digital bank in Thailand and Indonesia a couple of years ago in order to grow outside of Singapore. The strategy really was to grow digital, really a digital first strategy. COVID has accelerated digital, and that's further accelerated how we actually perform out in the region. But ecosystem partnerships for us is a key part of this strategy because rather than building branches, we want to build relationships that extend our reach through relevant use cases with partnerships. So whether it's travel, whether it's e-commerce, telco, ride hailing, and so forth, there's lots of opportunities to interact with customers where they live their digital lives. So that's really what we're trying to do, connect with customers to where they are so that they don't necessarily have to come to a bank and actually go through some of the steps there. And we become almost invisible part of their journey where they operate online.
So when you talk about becoming invisible, so how do you bring that invisibility? It's more introducing touch points within the banking ecosystem or going also integrating it with more third party partnerships, right? It's more about wherever the customer goes, if the bank interface is embedded into its day-to-day journey, right?
Yeah, sure. So I split the partnerships broadly in two categories. One being capability partners, second being commercial partners. Capability partners, to me, they're partners that help us enable what it is we're trying to do. And These are typically areas of expertise that we don't want to bring in-house. It may not be our core competency as a bank. So whether this is around data, whether this is around AI or credit, right? We look at different capability partners in fintechs and seeing how we can embed those in our operating model in order to accelerate growth. The second is commercial partners, and that's really where we really accelerate this reach and extend our growth. And this is really something that we try to do to marry up with them and develop use cases that add value for the bank, that add value for the partner, and add value for the customer ultimately. Because if those three are not in sync, then that is not going to be a sustainable partnership where it's a lopsided relationship where that's ultimately not sustainable. So it's something that we try to balance to make sure that there's value on all three parts, and then we can go to market in a sustainable way in terms of a productized solution that can be extended for that partner and then multiple partners following after that as well.
I would like to add 2 points to Arvid. Arvid articulated really well around the two major components. I think one of the most challenging things for any market, irrespective, I think there are a lot of examples in the market around partnership and success stories around payments or lending, for example. I think these are relatively good examples, and they're scalable and they're much more easy and intuitive for consumers to understand. Borrowing money and spending money, consumers understand that part. I think when you look at the finance vertical as a business, there are many complex services and products, such as, say, life insurance or investments at scale. So I think building an ecosystem for the financial industry, it is quite challenging from creating value, as I would put it on win-win side. Majority of the industry who harness consumers' focus on that platform tend to have a better margin than financial products. So financial product margins are pretty thin, heavily regulated, and therefore creating the win-win is a very, very much dependent on the partner's willingness to create value, joint value with the consumers. So what we are discovering ourselves as we experiment with the ecosystem is that the consumers themselves need to see what is a value exchange on any given platform, whether it's a product or a consumption that taking place of a service, combined with the convenience of finance. At the end of the day, the more consumers are able to fulfill their objectives and goals within the space they are in at that moment, then the win-win can take place. This equilibrium, it's not that easy to strike, specifically when there is a complexity that is from regulation perspective, authenticity perspective, understanding your customer perspective, and then fulfillment perspective in multiple layers. And this certainly is not that easy to do globally, in a sense, across border. And this is one of the reasons why we haven't seen some of the largest ecosystems, which are all tech-driven today. I mean, 6 out of 7 top companies in the world are all ecosystems. But yet, if you look at Apple, they've just managed to put payment as an ubiquitous, because payment globally was always a network. If you look at Swift, was one of them, look at Visa, MasterCard, the networks were already there supporting that acceleration point.
Agreed. So very interestingly that you mentioned that, does that also improve the per capita consumption of service? Now that we see that, we've created that ease where the customer can interact at different levels. We also see that we're trying to create this interconnected network between building value for the partner, building value for ourselves, and for the customer. But essentially, in the end goal, do we also see that from traditional standpoint to now an ecosystem-driven strategy, the customer is able to consume more products and services? Do we see that kind of change?
I have 2 points to make on that. I think the traditional economics doesn't change, really.
Okay.
From a consumer perspective. I'm not talking about from financial industry or from a technology perspective. It's purely for consumer. Consumer economics remain consistent. I think it's all about situation and the goal of individual customers. If you think about it, COVID-19, as Arvid pointed out earlier, did create an acceleration point because the needs were very clear. as I mentioned in previous debates, there were 7 Ps that were completely disrupted, from pricing, product, place, proposition, all the pivot, and individual's wealth. So as those things pivot, then the consumption goes up because convenience counts and the value counts. So I think creating consumer value at a touch point that consumer sees as higher than any other touch points they have experienced is where the consumption will lie to go up. But I do believe it will be still traditional economics. For example, if you look at today, inflation going up, people are going to curtail themselves in spending money, and therefore the consumption will naturally, due to the economic environment, will go down. It's nothing to do with the ecosystem.
I think it's small. I think I agree, Ketan, with you on the short term. On the long term, I've got a slightly different perspective. So the way I see ecosystems playing a part in the lives of consumers is through inclusion. A lot of people, they're obviously getting into digital, although sometimes last mile payments are still, let's say, cash on delivery and things like that. I think one of the objectives of digital banks regionally, supported by the regulators, is financial inclusion. And this is more a longer term thing where customers actually come out of the situation they are currently, whether it's consumers or whether it's SMEs. There's an opportunity for a better education around financial services, allowing them to gain value from this. And I think in the long term, I'm talking 10, 15 years down the line, I think we'll see economic growth or benefits coming through some of these things as these adoptions mature and as these networks become more effective over time. So I think from a customer angle, I think there is something that actually will hopefully evolve.
Yeah, I agree. And I think we are talking about generational change here, because currently, the market has got different generation that's transitioning into digitization, and therefore the effect of value will take time.
Great. So, in that sense, like as Arvid mentioned, there'll be different stages of growth, and over a period of time, these traditional economies will change. So, does that also change the success measures in terms of how you're measuring your revenues, your profitability when compared to traditional business, especially in the context of now we're talking about ecosystems? Are there new measures of success over there?
Of course, I believe that before we talk about measure, we need to think about the operating model. The financial services operating model would have to change significantly, and that will also, as I would put down, as the consumer evolves over 10, 15 years, to live and trust the ecosystems through which they can consume financial services. Equally, the banks would have to change their operating models to create value. If the financial services remain in a traditional operating model, yet participate or orchestrate or even own an ecosystem, the economics would be far, far different. So it would not be possible to achieve profitability for a financial institution given the very wafer thin margin. Item one. Item two, if we look at the last 5-7 years of debate around, say, a good example being Robinhood, where it's a race to zero. Digitization is a transparency business, right? So if the value creation between partner, consumer, and the financial vertical is race to zero, then it would require a drastic change in our operating model to create sustainable growth. And we talk about growth, and we talk about market share, we talk about and given the margins at the moment, something has to give.
And what do you think, Arvid? Is it something different for UOB in terms of measuring growth?
Yeah, so growth, but partnerships and measuring growth is definitely a key theme. We do expect that more than 50% of our growth is going to directly come from partnerships. Like Ketan pointed out, it has to imply changes to our operating and even business model, because partners expect to share value. There are thinner margins in banking, and now we even have to give a share of that. Meaning, how do you break even from a marginal profitability perspective and figure out the unit economics on a per customer basis, so that you can manage the revenues you get from the customer and the kind of cost you're actually spending on that customer on an annual basis. So you have to rethink, how do you actually service these customers? How do you operate in an environment that's radically different than one that is traditional banking? So I think that sharing of value is I think one key measure. The second one I think comes down to customer experience. I think customers see the value in experiences. Banking has been notoriously behind other experiences, and they're trying to catch up and making things simpler and easier. Obviously, other industries aren't as heavily regulated as banks, so it's a little bit of an unfair playground, I suppose. But they will always compare and ask questions, and you can't fully expect them to understand the ins and outs of why there are such limitations. I think lastly, and a metric that's going to be really important, is share of engagement. And in companies like Facebook or Netflix, and even like Twitter and so forth, this is already a big measure where people measure, how much of their time are they spending on the platform.
Right.
Platform players want to keep customers engaged on that platform, keep them on that platform, and for as long as possible, so that they can monetize their time and their data from that platform. So I think the share of engagement will directly relate to actually a value. It may be even how some of the new emerging players are valued in time. So I think that engagement part of it is going to be key in terms of how we keep the attention and the monetization for customers.
Interesting. So one of the points that you said was like banks operate on thinner margins, right? And that also puts a lot of pressure on their efficiency. So does that mean that when the banks are thinking about building ecosystems or even going out and partnering to third-party ecosystems, it actually reduces the pressure on their cost structures, and they're able to achieve a much lesser cost efficiency as compared to what traditional businesses, because there's branch maintenance, there's personal maintenance,
Yeah.
and more of that is now transferred into a shared value concept.
Yeah, so conventional banks will come with legacy baggage, obviously.
Right.
The new virtual banks have less of this nuance. As Ketan would understand as well, as we've been in the trenches on partnerships and trying to actually enable some of this growth, there's lots of nuances to how we get things going, and a lot of complexity as well. I'll give one example in terms of how we try to operationalize this and provide a leaner model. That we've launched an embedded finance play in Indonesia recently as UOB. It's a quasi buy now pay later. It's an e-commerce loan that we enable through a third-party capability partner, as I mentioned before.
Right.
We have a joint venture and have a significant stake in this fintech that essentially establishes ties with partnerships, API ties, as a data aggregator, allowing us a fuller picture of a customer so that we can do credit underwriting. Now, they actually help us with speed to market, because they reach out to those partners and they establish those APIs much quicker and cheaper than we could do internally, because obviously in banks there's technology backlogs and time associated with getting things to market. So this agility gives us a competitive advantage, because it allows us to rapidly scale, to aggregate data, and then work through partners to leverage that data to provide a compelling use case. So overall, it's a much more efficient process in terms of the overall credit lifecycle and our ability to safely provide credit to our customers, even for small ticket items such as e-commerce loans. And that's ultimately what we're trying to do. It's really try to provide some level of financial inclusion, credit grooming our customers, leveraging data and partnerships, so that we can make the entire ecosystem benefit from this as well.
Wow, what a great example. Yes. Any thoughts?
I have a couple of thoughts on that. I think we have some good success stories in market here too. My biggest view of near future is that, as Arvid mentioned, there are banks who are still struggling to digitize and bring their customer services up, and then there are banks who have actually achieved a decent degree of success in digitization in the region, right? And one of the major benefit to the financial institutions who have actually been investing in the last 10 years in digitization is they do have very compatible technology, just like what I would mention in UAB has done that in the region. We are doing that also locally with taxis. We're doing that with restaurants. So we have really good retail innovation connection where we are engaged with the POS of a taxi or a POS of a restaurant, and be able to offer both the B2B merchant services in collaboration as well as to the consumers. But the interesting thing I find is that, and this is where one of the major evolution in my view, as I see, I've seen digital evolution since 1998. So nearly 2 full decades of what I'm seeing between Europe and Asia. And I'm
Right.
seeing that everybody who moves first, a lot of people catch up. As people catch up, it becomes commodity again, and then the value drops, right? So sustainable value creation, it's going to be a challenge. This is why a stronger ecosystem debate around open loop and closed loop is going to be very, very much debated. Otherwise, it's impossible to create a return, sustainable return. You would have short-term returns, and then you're back to square one, and you have to reinvent again, right? And that is
Right.
very exhausting, right? Specifically for regulated verticals, right? So this is going to be interesting, in my view, to watch over the next 5 to 8 years as quite a number of intelligent technologies become mature and accessible to consumers, and more importantly, consumers started using it.
Right. So, in that case, so now that we've talked about this shared value, shared cost, does that also mean that the banks and FIs have to come up with certain prerequisites when they try to build an ecosystem, especially in terms of how can they grow that, how can they scale that? Are there any strategies that have worked well in the past?
I have a few points to react to yours. I think the banks today, specifically, if they've not participated or built an ecosystem, UOB is great example of moving forward. I know that other banks are doing that in the region. I think
Right.
very much as a vision, the ecosystem vision should be dynamic.
Mhm.
It should be on the basis of collaboration. It needs to have a design that influences usage, not
Mhm.
sell. It needs to the consumer or a B2B people pull, not push. It should be more indirect finance. It shouldn't be so direct in the face. Otherwise, the bank channels are available for that.
True.
Um, it needs to leverage the network, so ability to pivot quickly digitally to be
Mhm.
present where the consumers are, and it should be more externally focused, not internally focused. So, the financial vertical has more influencing to do of the regulator, governance, as well as some of the internal systems, and as we discussed earlier, business and operating models.
Interesting. Any thoughts, Arvid?
Yeah, so it's complicated and it's evolving. I think where we are now, especially in Asia, is not yet an a, a great progress compared to other parts of the world anyway. A lot of things are going to have to support this growth, such as the regulatory environment. Obviously, depending on the markets, it's more evolved in some places than others. One example of that is standardization of APIs. Some countries have started to dictate standardization of APIs, where we build certain APIs and then they come back and say, well, this is what they should be. Ultimately, that is, or a centralized governance of API is really where it should point to, so that different organizations can expose and consume their APIs freely without the need to having to rework them or tailor make them to their processes, so that it becomes easy and seamless, almost in this open banking type of a way. Related to that is a data, and I think there needs to, or we need to land on some position around data in a responsible and transparent way, obviously driven through a consent or a customer consent framework, so that they take ownership of this data to a degree. The banks ultimately don't own it, or the partners don't own it. it's the customers that should own it, and it should be transparent and to them how it's being used. There's plenty of use cases out there in terms of how that's affected some companies. Customer ownership and intellectual property ownership as well, big topic in how you operationalize and scale an ecosystem. These are ongoing discussions with partners that we have. Sometimes it's a deal breaker. So it's we need to be clear up front in terms of what are our boundaries around some of these things. And then lastly, commercials. Again, we need to be upfront. Expectations, the vision, the strategy, the commercial expectations, given that both organizations would need to make heavy investments to activate some of these partnerships would need to be agreed up front and fast, because otherwise you could be 6, 9 or 9 months down the road having had very detailed and in-depth discussions with lots of teams around the business for a partnership to not materialize, and that frankly that's a lot of wastage in an organization.
I agree with Arvid. I think one of the points I want to compliment Arvid with is that when I talked about dynamic, I think that when banks started doing innovation with fintechs or without fintechs on their own, it is been very dynamic in the last 10 years in Asia, and it still continues to be. So never be afraid to use a sandbox approach with a partner to accelerate understanding and alleviate any ambiguity in the partnership. We forget that financial industry professionals are meticulous. We have to be, because we've got small margin. We haven't got a choice to make losses. We are very meticulous. When we look at the cross industry, whether it's food or whether it's transport, whether any part of the lifestyle side, some of them are not as knowledgeable about financial services complexities. So helping our partners to understand, and us understanding their value chain equally in the consumption patterns, becomes an important sharing in order to create that dynamic partnership.
I agree. I think that's a very essential debate that keeps happening now in the ecosystem, is that what is the actual customer relationship, whether the customer is with the bank or the customer is with the capability partner, how is the data shared? So very good points that are raised today by both of you, that that needs to be first established way before, whether in a sandbox environment or through the discussions, so that at least when we go out in the market, we have clear lines as to who will own the data in a most responsible way, right?
I
So that
I, I have sorry, Varnika, but I think that's where the major issue is in the industry. I would see it very differently. The question is, each product, not the organization, not the industry, each product the customer spends money on, whether it's
right,
financial or non-financial, is a share of wallet.
yeah,
Originally, banks used to talk about share of wallet by saying these bunch of customers in the market are mine and exclusively mine, right?
right,
That's how the wallet share was mentioned, how much depth of wallet. Now it's not about customer. The customer data will have to be shared. So individually, if I go to buy food, I take a taxi, I actually buy an investment product, each one of those businesses offline knows my data. So what's the
right.
difference in an ecosystem, right? There should be no delineation in that. I'm just combining all of my convenience in one place through digitization. So the data should be equally and appropriately, as
Yeah,
required, should be with the individual incumbent who has provided the product or service. But the important thing is that if there are 5 banks in that ecosystem, each one of them have to think about how much they can provide experience and value to
right.
that customer to create the financial slice of their wallet.
Yeah, no, very interesting point. So I think that brings us to the last 2 minutes of this session, and I would love to take these two questions that have come from the audience. So I think they're pretty interrelated. So both Keswan and Venkatraman talk about that, players like Paytm and GPay are eating away share of the wallet from traditional bankers. Now, firstly, does it mean that banks will look themselves as back-end players or co-working with the fintech? Secondly, how do we see this ecosystem progressing with respect to data and security? So I think the second part of the question in terms of data and security is what Ketan was answering at the moment. And in terms of how do we think that the banks will shift into back-end players? This is an interesting play to hear from the two of you.
Arvid, do you want to go first?
Yeah, sure. So yeah, that's obviously a big question. I think payments overall is one of the biggest drivers of adoption, as we know, and that's where we can get wallet share of customers and so forth. So it's something always on our minds. Currently, as a bank, we do rely on the network rails like the Visas and Mastercards of the world. Although some of this is rapidly changing, and we're seeing actually the advancement into e-wallets and certain segments picking that up a little bit more. It's a space we're watching closely. As a regional bank, we do obviously want to encourage regional connectivity. So we're very much in tune with, let's say, regional players that want to build regional e-wallets and things, because you need to be in some of these games in order to be a participant in it, right? So to me, it's rather a thing about participation rather than ownership. Ultimately, we want to give utility to the customers to be able to transact locally, internationally, between P2P, C2B, and so forth. But ownership in that is not a big one. I think from a market share perspective, I don't think that we see a real issue. I think as a bank, we stand strong where it comes to knowing what we want to provide to the customers and where our points of differentiation are, leveraging partnership to enable payments.
I would say that the payment game has been an old one now. Banks still can be in the game if they wish to do so, but it's a margin issue. I think if the platforms have got the scale and they're able to process payments more efficiently then jointly both financial institutions and the platforms can create value for customers. So that's item number one. I think that on the payment landscape, I see that, I don't know any consumers, at least I don't do it, and there may be consumers out there, but I do not know anybody who would wake up in the morning and have 50 wallets to select one to take you to work. Okay, I mean, people only have one wallet, generally speaking. Now, having so many wallets in the market is, first of all, is going to consolidate at one point. And I'm just waiting for that consolidation to take place. The second phase is going to be more transglobal, cross-border. That's also going to come, and there is all sorts of talk in that front. I'm looking at some fantastic options at the moment of how to do cross-border for both Chinese diaspora, Indian diaspora, and others. Right, there are diasporas. There are so much international opportunities we can provide to customers, and I think that will come. So I'm only looking at the second phase, and this phase is going to kind of have its day. But when I look at the data side of it, I think it's going to be important that the regulators are catching up. It is inevitable that we got to do this the right way, and I think we will land on our feet when it comes to data, at least nationally. I'm not sure cross-border is there yet, and that is very complex. But nationally, I think most countries will land very well in data and security both.
Good point.
Great. Yeah. So thank you, Ketan and Arvid. We're 2 minutes over, and I don't want to end the conversation, but I'm getting the cues from the next session to please start on time. But thank you so much, Ketan and Arvid. This was a really, really incredible session. Thank you for the insights.
Thank you for inviting us.
Pleasure. Thanks, everyone. Bye-bye.
Thank you.